Yo guys, it's your boy Mohamad back again with another video. And you guys have been dying in the comment section after my first couple of videos or something. You guys have been wanting me to make a Forex course for so long. So I'm finally doing it. I'm going to try doing under 10 minutes. So even if you're a donut, if you're a dog, if you're a fairy, whatever you are, if you are a kid, then you can learn how to do Forex by the end of this video. Like I said, I'm going to try doing under 10 minutes. And I also do have a Forex course for £10,000 if you guys want to buy that. It's really cheap.
Boy, if you don't get...
So it's going to be in the link below in the description. So if you guys want to do that, then... By the way, I'm joking, I don't have a course. But if you guys want to see one, then comment it down below. But anyway, without further ado, let's get into the video. But you guys already know the drill. Like, comment, share, and subscribe. Let's get into the video. Okay, so let's jump straight into it. And we're going to start off with pairs. And pretty much what a pair is the two currencies that you're going to be trading. So for this example, we're going to be using Canadian dollar and Japanese yen. The Canadian dollar, which is on the left, is going to be the base pair. And the Japanese yen, which is on the right, is going to be called a quote pair. And the base pair is always equal to 1, while the Japanese yen, which is a quote, is going to be equal to whatever it is at that time. So right now it's 81.606, okay? And you can see the symbol up here for that currency, CAD JPY. Now jumping straight into the next part, which is pips. 1 pip is pretty much the smallest move that our currency can move. And it's seen on this this side here where the price is shown. The JPY is currently 81.608. And on a Japanese yen pair, on Japanese yen, you can only see there's 5 numbers, 81.611. And that second decimal is equal to 1 pip on the Japanese yen. But if we look on another currency, such as the Euro USD, we can see that there's 1.21623. So there's about 6 numbers in there. And on a normal pair, like such as the Euro USD, the 4th decimal is equal to 1 pip. So when the 4th decimal moves up 1 or moves down 1, that means it's moved 1 pip. Okay, now we're jumping straight into the next part, which is candlesticks and time frames, okay? And what a candlestick is pretty much everything you see on this chart. So if we zoom in real quick on here, we can see that there's a bunch of candlesticks and we're using a time frame, 1 day. And time frame you can put on anything you want. In this example, we're using the daily time frame, which means every single candlestick here is equal to 1 day. So the data is being shown for 1 single day in every single candle. And a green candle is self-explanatory, it means it's going up. And a red candle means the price is going down. So let's look at the red candle first. We can see that the highest point it's reached is over here, and that's the wick. The wick is a really long part, and then there's a body, which is like the bulk of the candle sometimes. So you can see there's really big bodies, there's really small bodies, there's really long wicks, and there's shorter wicks. And pretty much the very top of the wick on the red candle is the highest the price is reached in that single time frame. The bottom of the candle or the wick is the lowest the price is reached in that time frame. And on the red one, the top of the body is where it opened, the bottom of the body is where the price closed in that day. And then on the green one, it's pretty much the same, but it's different when it comes to the body. The bottom of the body is where it opened, and the top of the body is where it closed. But right now, this is the latest candle. This one right here is the latest candle. Let me quickly outline it. This here is the latest candle. So it currently hasn't really closed. Well, I don't know what I've done. This candle hasn't currently closed. It's still in progress, and it's gonna close at the end of this day. And now there's a lot of different candlestick patterns. There's single candlestick patterns. There's double ones. There's triples, and there's even really big ones like head and shoulders, reverse head and shoulders, double bottoms, double tops. There's a lot of different ones that we can talk about, but when it comes to single candles, the most important ones are probably dojis, hammers, and stuff like that. I'm probably going to put a lot of stuff on the screen as well to tell you what to look for when you're trading, because I can't really go through all of them right now. I can outline a few right now. So for example, if we look here, there's a 3 one here. There's a 3 candlestick pattern right here, and this is called an evening star. And I don't really know how to explain it and how to show it to you unless we actually go in depth, which I don't have time for in this video because I'm trying to be under 10 minutes. But anyway, pretty much the larger time frame makes up the lower time frame. So for example, if we put a box around, let's say this latest one, okay, and then we go in the 1 hour time frame, zoom out, we can see that in the larger time frame, it was only one candlestick, but in the larger time frame, this is everything that happened in that one candlestick. Okay, so it pretty much, when you're analyzing from a top-down analysis, you're going up from a daily time frame to a 4 hour to a 1 hour or something like that. It depends on your trading style, and that's pretty much it for this part. Okay, and now we're looking at trends, trend lines, and the different types of markets. So in Forex, there's 2 types of trends and 2 types of markets. Okay, and there's an uptrend and a downtrend. And how you can identify this is by doing higher lows or higher highs. Okay, so quickly, let's get a brush up. In Forex, like I said, there's a trending market, which is pretty much going up or down, and there's a ranging market, which is just going like this. So let me quickly try to find a ranging market for you guys. We can call this section right here ranging market, and we can call this trending market because it's going up. Okay, and pretty much you don't want to trade in a ranging market unless you're trading high or selling high, buying low. And when the market is trending, you want to buy up, sell down. You pretty much just follow the trend. Like, the trend is your friend. That's what a lot of people say, but it depends on how you trade. But like I said, this here is a trending market. It's in an uptrend, and we can see that because it has a lower high or a higher low, higher high, higher low, higher high, higher low, and higher high. Pretty much, I think he just broke that. I can't really tell, but that's pretty much how you tell if a market is trending or not. And we can also identify it by making something called a trend line, which touches the bottom of every single wick, and we can see that by doing this. Or you can even go on the line chart and pretty much try to line it up with all the bottoms of the line, and you can come up with a trend. But if we zoom out, for example, we might see something else where the market is ranging down. So for example, this is a really big downtrend. Okay, this is a really big downtrend, and it broke it up here and then just carried on going down anyway. So that was pretty much a fake out. Okay, like I said, I can't really get into the nitty-gritty of this, but this is pretty much the basics. This is a really big downtrend, this is a small little uptrend, and this is a ranging market. And the little lines I've drew, they're called the trend lines. So this is a downtrend line and this is an uptrend line. When it comes to a downtrend, instead of you saying higher highs and higher lows, you're saying lower highs and lower lows. Now, what we're going to do is we're going to zoom into the ranging market, and I'm going to show you exactly what support and resistance is. So a support is pretty much a line or an area. It's not really a line because it's not an exact number, but it's an area on the market where price cannot break underneath that level. So the line I drew here, you can see there's a lot of rejection here. The price keeps coming, hitting that support and going back up. And similarly, we can, for example, call this, or you know what, let's make a short one here. We can call this level a resistance because the price is not breaking through here until it got about to here, and then it broke through and then retested it here, then broke back down. And pretty much in a ranging market, you have a support, a resistance. You can always draw different support and resistance, not only in ranging markets. For our ranging markets, they're really easy to identify. And this is pretty much where you sell high and buy low. Because when you buy at the support, it's probably going to go up, and when you buy at the sell at the resistance, it's probably going to go down. All right, and now I'm going to show you what indicators are. But me personally, I don't use indicators. The only real indicators I use is an RSI and a moving average. I'm going to quickly put on the moving averages here. And if we go zoom back in, we can see that these two lines are the two moving averages I use. I use an 8 and a 14, and the lower the number, the faster the moving averages are. Okay, so these are really short-term moving averages, and pretty much when the price is underneath these moving averages, it's probably in a downtrend. Or you can also say it's in a downtrend when the red is above the green one, or it's in an uptrend when the green is above the red one. Okay, so those are the only two indicators I like using, the moving average and the RSI. And there's a lot of different strategies we can get into, but we can't really do that right now in this video. Okay, and finally, one last thing I want to go over before this video finishes is Confluence trading and pretty much how to enter trades. What Confluence means is when there's different things or different indicators in price telling you the same thing. So for example, when you want to enter a trade, you don't just enter because you're on an uptrend. Okay, you're not going to buy because you're on an uptrend. You might buy because you're on an uptrend And because maybe what I told you about the moving average, maybe price is above the moving average and it's literally just hit the trend line, okay? So it's hit the trend line, you're in an uptrend and the price is breaking above the moving average. Those are three confluences, three things telling you the same thing, and that price might go up, so you might enter a trade, okay? And people don't just enter trades and just leave it there. People might watch their trades, people might put a stop loss and they take profit. And what a stop loss is pretty much, let's quickly do this. Say we enter here and boom, okay? So this is an example of a stop loss on a take profit, okay? The stop loss is where price may hit and it closes your trade automatically. A take profit is where price might go and then close your trade automatically as well in profit. So a take profit is literally you taking profit automatically. A stop loss is you stopping your losses automatically as well. Like you don't have to keep watching it. You can just put a stop loss, a take profit and go enjoy the rest of your day. Probably come back to a loss trade or a good trade. You might be happy. And yeah. And the very, very final thing I want to talk about is trading habits. You really want to come up with a strategy that you stick to, that you backtest, and you pretty much don't divert or say maybe I'll take this trade, maybe I'll take that trade. You just want to stick to a single trading setup that you take every single time you see a trading setup with a good win to loss ratio. So maybe you win it 60% of the time, 70% of the time. That's a really good one. And yeah, that's pretty much it. Oh my God. That was probably one of the hardest videos I've had to record. I did it in about 3 goes. And there was a lot of stuttering in there, which I'm probably gonna try to cut out for you guys. Pretty much when I'm recording the video, I keep looking at my phone, which has like the little setup of what I want to talk about. So I don't know if you guys can see this, but I made some notes about what I'm going to be talking about. And I had to look at my phone, I had to look at this screen as well, see the time on the bottom, and it did reach above 10 minutes, but I'm pretty sure if I cut it down, it's gonna go under 10 minutes. So I think I did beat the challenge, teaching you guys how to trade Forex in under 10 minutes. We're gonna see if I actually did it when I edit the video. If I did, then congratulations to me. Oh, I hope you guys enjoyed that video. And oh, hold on, I think I just got money. Oh, I got paid. I hope you guys enjoyed that video. I hope you guys actually learned something from it. And I was speaking really, really fast. So if you guys want, you can go back, watch a video and play it in slow motion if you want, maybe like 0.75 or whatever YouTube lets you do. I touched on the very basics of Forex, but it's pretty much everything you should know in order to start trading. I'm going to put up some candlesticks on the screen as well when I'm editing a video, just so you guys know exactly what you're looking for when you're trading, because candlesticks are really important when you're trading, especially in technical analysis and stuff. And that's pretty much it. So if you guys enjoyed the video, if you guys want to see me do a longer version like this, like a really in-depth version, maybe a series or something when it comes to Forex, because there's so much stuff I never touched on in this video. It's just the basics that you guys need to know in order to actually start trading. Then comment that down below, tell me if you guys actually want to see that. Maybe you guys want to see something to do with crypto, stocks, etc. Tell me what you guys want to see. If you guys enjoyed the video, like, comment, share and subscribe, and I'll see you guys on the next video.